Let's welcome on board our Mukundan, the Managing Director and CEO of the company, joining in on the show right now. Mr. Mukundan, great to have you on ET Now, and good outperformance, especially when it came to India-UK basic chemistry and your specialty products. Tell me whether this outperformance is here to stay, or assure us that rather.
Thank you very much. Thank you for having me at this point of time. I think the outperformance in terms of the overall business itself, I think has been a good turnaround from Q4. We said that the pain in Europe is going to end, and a lot of the actions we took last year have borne fruit. In addition to that, we had said that the capacity expansion in India will play out this year, which has happened. So actually the big shift, as I said, one third, one third, one third. One third of the benefit would come from the capacity in India, which has come on stream. One third will come out of the restructuring we did in UK, and one third would come out of the cost out which we were doing. Now, this quarter also had lots of one-offs, about 100 odd crores. So I think we should discount that below EBITDA, which was mostly due to tax refunds. I think those refunds, we are somewhere in the pipeline, but I think the timing of which we really don't know. So we have the orders, so I think we need to work our way through this. So really, I think what this year is going to be getting back to a normal. Last year was a year full of challenges and pain because we are undertaking restructuring in Europe, and also the capacities were coming on stream, and it was a bit of a wobbly year. In terms of how the year will play out, I think clearly Q1 and Q2, between Q1 and Q2, the Q2 tends to be slightly lesser than Q1, but then again it picks up during the winter months. That's how the demand pattern is, mainly on account of monsoon in India, wherein both construction and detergent demand comes down. But we do expect to follow the same pattern. So I really see no major surprises in the coming year. We had also anticipated that many of the trade-related issues will be very hazy, but the pace at which some of the deals have been concluded makes us believe at least the two big ones which are out of the way is a big positive in terms of at least the European deal, especially the UK-US deal, is a big positive because I think at least it stabilizes the market. And now with the EU done, we think some bit of stability will come. Now we need to watch out for the other ones in the offing, which is mainly between China and India. On China, US has been stressing the need to reduce industrial overcapacity, which has been one of the big sticking points. Hopefully, the Chinese will respond, and that should also ease many of the issues the chemical stocks are facing, mainly arising out of the industrial overcapacity in that country.
Interesting. Yeah, a lot of moving parts when it comes to your business. But, given the points that you highlighted earlier, no wonder then your margins have been strong. They're almost touching that 18% mark. Do you think there are enough levers in place for you to sustain these margins levels, or perhaps even better that in the coming quarters?
I think for the full year, I would simply say for the full year, for example, every quarter will have its own quarter end issues. But for the full year, I said between last year and this year, we had actually indicated there's a 600 crore move which will be seen. Mainly, as I said, one third coming out of 200 crores out of UK, especially out of restructuring, and 200 will be the additional EBITDA out of India, and 200 will be out of the cost out. I think most of them are on track. We see no major surprises. Quarter to quarter, there could be a bit of variation, but I do know that a third and fourth quarter will be complete turnaround because those 2 quarters, we actually had a negative margin in those 2 quarters.
Right. And Mr. Mukundan, let's talk about some segments in soda ash demand supply balance that continues to be soft in the short term owing to tariff changes and excess supply across some regions. Any outlook on when we can see this trend normalizing?
See, we have not planned that in our calculation. When I make these numbers, we have actually in our numbers we have budgeted or at least we have planned that it's going to remain completely in this range. We are not, in fact, we've not even taken the impact of MIP in our calculation. So we don't want to take that into account. We do believe that there will be changes in the offing in China. The companies in China are undergoing a lot of pain, and especially the ones on the coast. I think they will need to take some action. But these are pretty much large-scale actions which we will see as they unravel. Already, we know Shandong Haiwa has announced a massive shutdown. So that takes out close to 1 million ton, if possible, over a period. But we don't know the timing of it. So these actions will start. In Europe, we know already 2 units ceased operation. One was our own, and the other one was in by the Polish company. So I think we would continue to see the uncompetitive units in China and Europe take the right steps. It may be a quarter there, but really those will go towards rebalancing the market.
All right. Hi, Mr. Mukundan. Morning. This is Shrishti also joining in. Just wanted to touch upon and get more details on your India business, because that has seen quite a stable performance, and especially in these numbers, there was a higher volume in India offset by lower volumes in US, UK and Kenya. Do you believe that this trend is here to stay, and this is something that we should be watching out for in the upcoming quarters, wherein the outperformance can be a little bit more with respect to the India business?
Yeah, I think you would continue to see that shift in India business. I think India, the part of the most of the capacities which were put up in Mithapur has come on stream. The next string of capacity shifts which will happen will be out of our Nellore plant, where 5,000 ton of FOSS is under implementation to be commissioned by September, October. We would also see in the second quarter the pharmaceutical salt plant in UK getting commissioned. That should give us an additional kick from what we had already have seen in India. In addition to that, I think the next phase of move in India will come once some of our balancing capacities come on stream in Mithapur, where we do expect anywhere between immediately about 50,000-60,000 ton of soda ash, and when we add full balancing equipment, close to about 150,000 ton of soda ash to come on stream with a very minor capex. So we are working on that, and clearly we see that towards the last quarter of the year, some additional capacity on soda ash would come on stream, and this will be an ongoing exercise. We have a pipeline of projects we announced, and they're all being done in steps and phases, not bringing on everything one stream, mainly keeping in account that our cash flows have to be managed in a very positive direction.
Mr. Mukundan, thanks so much for joining us and sharing your outlook as well as your earnings roundup with us. Great chatting with you. We hope to catch you next quarter as well.
Thank you.
Well, on that note, we'll slip into a very short break and have more discussions about what we can expect from today's as well as this week's trade when we return on the other side.